It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast Podcast as we navigate together once again through a weekend. Hope your weekend is a good one if you've been looking at property, whether you've been buying or just looking. And of course, our thoughts go out to all of those people that wanted to see property in Queensland, just unable to do so because of the cyclone, which is now a tropical low system. Still plenty of headaches for Queensland and northern New South Wales. Despite the downgrade, tens of thousands of people without power, many roofs ripped from buildings. So good luck if you are in one of those areas that is affected. Well, coming up, it has been another busy week. We caught up with Rebecca Cudderman, a real estate principal there in Logan in Brisbane. And she gave us a little bit of a breakdown, particularly about those townhouses there in Logan that sat idle for so many years. Sam Dine was here this week from Canberra, and from Toowoomba, Jackie Walker was here from Remax. So all of that is coming up as we look back across the last 7 days on the Real Estate Breakfast.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
You're there in Logan. You don't want to hear that. You want people to go to Logan, of course, and buy in your area. But it is attracting people from Queensland to make the move.
100%. I've seen it actually quite a few times now. Obviously, it was quite the opposite in amongst COVID. We were getting all those Melbourne people relocating up here. But yeah, over the last probably 12 months, I've actually had quite a number of clients relocate back to Melbourne, whether it be to build or just secure something else for an investment.
Yeah, part of the problem is when you have a look at this figure of Brisbane's entry-level house prices, they have jumped by $300,000 in 5 years. I mean, that's pretty reasonable.
Yeah. At the same time, I guess $300,000 over 5 years, it's a hell of a lot of money for someone to be able to try and save to get into the market. A lot of those people are now getting a lot of assistance, or needing a lot of assistance, I should say, to be able to actually make up that shortfall.
So let's get on to the townhouse market, because this has been a bit of a revolution in your marketplace, something that wasn't happening a few years ago, right?
Very much so. I do recall we had hundreds of townhouses sitting for probably close to a year up for sale. We could not get rid of them. They were probably $200,000 less than what they were built for and bought for brand new. So up until just before COVID, we almost could not give them away. So the trend over the last 3 years, 4 years has been that they've just been increasingly becoming far more popular because of that price point, that sweet spot for first home buyers. What was once an entry-level home is now the same price as an entry-level townhouse, if not more. So unfortunately, with everything having gone up, townhouses are becoming the far more affordable option, especially those that have got that lower body corporate fee where the outgoings moving forward aren't all that bad, but it's still getting their foot in the door, whether it be for an investment or first home.
Okay, Rebecca, make everybody sort of cry into their cereal this morning. You said that you couldn't give them away pre-COVID. What was the price point? Because they were cheaper than the cost to build them, you said. So come on, let us all have a little cry.
I do recall I had many townhouses, 3-bedroom, 2-bathroom, up for sale for probably that early $200,000 range, less than 10 years old. I pain myself to say that I didn't buy any.
For sure. I think in Canberra, we've got such a large portion of our workforce are in the Australian public service. So what I tend to see is a lot of people do tend to get together into couples quite early, and they've both got quite stable jobs. And I think that's what leads to our really high number of first home buyers nationally. But at the same time, what I've seen over the last few years is with interest rates as high as they are, people who 3 or 4 years ago might have been looking to spend $1 million on their second home, sort of capped at that $800,000, $900,000 price point. And that's just creating so much competition in that entry-level section, which is just driving the competition. So whilst higher price points have come down, this entry-level point just seems to keep going up, which is really hard.
Yes, the entry price point is moving rapidly. Domain reported on a couple first-time home buyers who spent 5 months searching for a home within their $850K budget. They hoped for a 3-bedroom townhouse in a couple of different suburbs. So tell us about that.
Yeah, so they were looking out in both Belconnen and Gungahlin, two sort of not regional. You sort of refer to Canberra as almost 5 sort of separate little towns, all linked by highways. It's not so much of a city here. So Belconnen and Gungahlin are 2 that are in the north, both a little bit more affordable than the city centre. And what the article mentions is that they would prefer to be sort of in a Belconnen or in a Gungahlin, but it's really hard to get a freestanding house in those inner regional spaces. So rather than going outside, which is almost a 30-minute drive to the city, which may not sound like much for a lot of the rest of the country, that's a long way for Canberra. And so they're having to compromise and going for a townhouse.
The apartment versus the house debate, buying an entry-level apartment in Canberra, significantly cheaper, no surprise there. Median price point at the moment around $462,000, nearly half the cost of a house. Despite the affordability, demand, of course, remains extremely high for standalone homes. Many first home buyers are looking at a couple of different suburbs there in Canberra. What are those suburbs?
Yeah, so again, all of the external regions, so Tuggeranong, Belconnen, Gungahlin, I think people have, or from what I'm hearing from friends that are first home buyers, they've got their parents in their ear saying you should buy something with a block of land and freestanding. So they're willing to go further out from the city to get that freestanding home rather than coming further in. So there's compromises across the board, but it's those further out regions that I'm seeing are really popular and there's still quite hot demand for.
When we looked at it, we had some great sales last year for apartments, and I'd had a couple of clients that we'd sold for, that had bought in 2021 that we sold for significantly higher. What we noticed is with the high interest rates, we were getting a lot of sort of ex-investor stock onto the market. And if we looked at some stats across neighbouring suburbs, in Crow's Nest, properties priced between 700 and 900 were about 50% of the market share, what was sold. And if we looked at other suburbs like Wollstonecraft and St Leonard's, 60 or 70% of that market was all over 1.1 to 2 million. So we saw actually just a lot of lower priced apartments selling last year than higher priced apartments.
And what has happened in terms of the first interest rate drop, like the conversations that you're having with people, not only buying the houses, but in particular the units? How much of a difference has that first rate cut made with the people that you're talking to?
So the first Saturday after the rate cuts, we actually had higher numbers than apartments that we'd listed the weekend before at their first opens. So initially, we certainly saw higher buyer groups through.
And what is the median house and unit price while we've got you there?
So for a house in Crow's Nest, the median price is 2.85, and for an apartment, it's 920.
And there's been a bit of media coverage, especially with building defects and strata management issues. Is that something that's kind of showing up at your end where people might be just getting a little bit nervous on some of these newer units that are coming onto the market?
Yes, there's a few buildings in Crow's Nest that have had certain cladding issues that are needing to have remedial works and also higher strata fees. Buyers are certainly being more cautious. We're providing all the information we can by providing them strata reports and things just to help them. There's definitely a cautiousness amongst the larger buildings and developments with high strata fees.
Now, if you're moving into the United States to live, perhaps a job is taking you there or love, something about the real estate market that is very unique to America is when you get a mortgage, you can fix the rate for the entirety of the loan. And so when the mortgage rate was lower, people were fixing their mortgage rates at a 2% rate. Now, where this gets a little bit tricky is people wanting to sell and refinance perhaps into a bigger home and find themselves jumping up to a 7% current mortgage rate. a lot of these people end up not moving because of that. However, they can do this negotiation of a buy down. And I'm going to get Crystal in Florida, who is joining us to explain that. But first, Crystal, welcome to the Real Estate Breakfast this morning. So when it comes to property buying, this moving between the rates, it's a big consideration.
Yes, I would say that's the most commonly asked question and concerns amongst the buyers and the sellers. Because when the sellers sell, they have to purchase a home as well. So they have to consider interest rates too. Thankfully here, we are very creative, very resourceful, and have great relationships with some lenders. And there's some excellent programs out there and options for example, rate buy down. And then there's some Florida bond programs that help fuel home ownership as well, that can help offset some of the higher interest rates. So that's definitely a concern. We've had to get a little creative. But if you think about it historically, back in the 1980s, interest rates were 14%, 12 to 14%. So historically, we're not significantly high, but it's just not what we were used to during the pandemic era. So we just have to get to, this is the new norm. They are predicted to go down slightly, not drastically. At the end of the day, you're still paying towards your home versus throwing away your money in rent. So I think this is a challenge that we are working through, and homeowners are beginning to accept and realize the importance of the home ownership versus let's just focus on the interest rate. That can be changed and you can refinance. And again, there's some very creative ways to get around that. And also your negotiating power, you are correct. Some of the price reductions were due to that. So you can make a better deal on the front end, because you have to pay a little higher in interest rates.
And for the Australian audience, just explain a little bit about the buy down, because in Australia, we don't have mortgages like in the US where you can fix the rate for 30 years. People will probably find this quite interesting in terms of what the buy down means and how that transaction works.
Sure. So a mortgage rate buy down is essentially where you pay extra money up front to lower the interest rate on your home loan. So that would be in addition to your typical closing costs. And what you can actually do is you can try to negotiate with the seller to help toward concessions and contributions to help pay that rate down. So essentially what that can do is lower your monthly payments. So if you take the lower monthly payment over a course of a 15-year mortgage or a 30-year mortgage, you can imagine that is a significant savings. So rather than negotiating with the seller, for example, money off the purchase price, say $15,000 or $20,000, you might save more money negotiating a rate buy down. Because again, if you accumulate the savings of your monthly mortgage over 15 or 30 years, that's a significant savings for you as a buyer.
Let's explore together the power of real estate.
And how much of a psychology coach are you with some of these first home buyers wanting to get into Double Bay, which is just so difficult?
Yeah, that's part of being a real estate agent. He's a psychologist. Look, I think with any first home buyer, it's about giving them all the information. They're new to the process. Certainly any first home buyer that comes through the door or gives me a call, I'm happy to educate them on the process so they feel confident. Double Bay, it's a terrific suburb. I've resold for so many people and have done so well there that I'm always encouraging people to enter, but also happy to be a sounding board. Buying a property can be a bit of a scary experience, particularly the first time.
Okay, and Toowoomba doesn't rely on any market factors like infrastructure, etc., or like mining. Second largest regional city in Australia. I mean, that's quite a big achievement, really, for Toowoomba. You kind of stand on your own two legs, so to speak.
That's exactly right. So Toowoomba, being the second largest inland city in Australia, just makes it an incredible place to buy, live and sell. Investment to families, just a wonderful, wonderful town. So that's why we continue with that steady growth.
And just talking about the units, let's have that breakdown, perhaps on an existing unit and new units. What's the median price in that range?
Okay, so we are finding that a 2-bedroom, 2-bathroom, single garage unit median price would be around your $595,000 to your $600,000. And for your homes, your median price is that $700,000.
And just in terms of the homes, what are you getting for that? How much land would be with that?
Look, you'd be looking at around about your 500 square metres.
And let me ask you, as far as the investors are concerned, what is happening at the moment, Jackie?
Okay, so we're seeing a lot of investors, especially from interstate. So we get a lot of phone calls. Investors are buying sight unseen, subject to building and pest inspection. We're seeing a lot of investors from Sydney and particular Melbourne as well, and ones coming in from out of town, out west, etc. Now, the draw card for Toowoomba investors is the fact that it is a constant growth. So because we have that constant growth, they know it's very, very safe to buy a home Toowoomba, and when they ever have to sell, they know they're going to grow their money, and it can grow significantly. I have seen investors buy, say, 2 years ago and turning around getting more than $200,000 from the sale. So that's really good. Although then you've got your capital gains tax to pay, of course. But in saying that, the growth in Toowoomba is phenomenal.
We connect you to the best real estate information across Australia. The Real Estate Podcast.